Okay, we're officially live. Swinging Bull back again for another earnings stream. Welcome, everybody. Swinging Bull PB Alerts. Do these earnings streams every Tuesday, Wednesday, Thursday. And today we have two stocks I'm going to be going over. Ticker symbol OXM, just Oxford Industries, and just a little bit about them. They're in textiles and apparel. They operate in the apparel industry, which owns and markets the Tommy Bahama, Lilly Pulitzer, Johnny Watt, Southern Tide, the Beaufort Bonnet Company, bunch of big apparel names that they own and operate. They also have their hand in the e-commerce and stuff like that, of course. So basically a retailer. Then we have LSAK. That's Lesaka Technologies. They're a fintech company. Okay, they're a South Africa-based fintech company. They utilizes its proprietary banking and payment technologies to deliver financial service solutions and software to consumers and merchants in Southern Africa. Its segments include consumer division, which is consumer, and then the merchant division. So fintech company, LSAK. And let's just see what time that they're going to report. OXM reports at 4:05 p.m. Eastern, and LSAK also reports at 4:05 p.m. Eastern. OXM, their forecast EPS $1.21, and their forecast revenue $407.6 million. Here's a look at their yearly chart, courtesy of Earnings Whispers. They've been downtrending for a while. Kind of been trading in a range since mid-June, like $40 to $50 range. They're closer to 40 now. They closed the regular session at $40.41. So let's see how their stock price reacts to their earnings data. LSAK, their forecast for EPS is negative 0.01. Forecast revenue is 131 million. And here's just a quick peek at their yearly chart here. You can tell this company also was kind of downtrending for most of this year, and they kind of bottomed out. And they're kind of trending up a little bit right now, making higher lows nonetheless. And LSAK closed the regular session at $4.73. So it's about 4:03 p.m. We got just a few more minutes, and we should get the data on both of these companies. But back to OXM, pull up some of these bigger time frame charts. You can see this thing's also been kind of trading in a range as well, like $36 to $47. I'd call it like a $10 range around there. So pretty clear what the resistance is. If they get a positive reaction, we'd like to see them break over 47 and some change here. That'd be the level I'd be looking at on the top side. If they get a negative reaction, we'd want this support level down here to hold around $36 towards the bottom of my volume profile here. So we'll see what kind of reaction they get. Again, if OXM gets a positive reaction, we'll be looking around 47 to 48 bucks, around there as a resistance. Support, I'm just going to call that $36. So let's see what they end up doing after the data gets released. 4:04 p.m. right now. Don't got any real movement yet. I got a little bit of pre-earnings jitters here, but going into the earnings, OXM had a positive PE ratio. Trailing 12-month was 7.85. Now we got over 100 people already in the stream. I know a lot of you are from X, probably some YouTube viewers streaming on Twitch and also Kick, courtesy of one of my colleagues, Pookie. So OXM, still waiting on the reaction. but their PE trailing 12-month was 7.85, so nice and positive. It's a $40 stock. EPS $5.15. They pay a 6.8% dividend according to Webull. So that's good. That's really good. Their free float, only 13 million free float. So it doesn't really take a lot of volume to move this stock, OXM. Let's look at the income statement real quick. Okay. Go annual first. Yeah, I mean, they typically are a profitable company with positive net income. 4 years back to back. 2021 was a pretty bad year for them, but outside of that, they've been nice and profitable. Year over year numbers, a little mixed, more biased to the green and the growth side. Debt to asset, 51% on OXM, so that's good. Let's see how much cash and equivalents OXM has. Okay, they got 9.4 million. That's as of February of 2025. Let's go quarterly view. Okay, as of May 2025, they got $8 million in cash and equivalents. So a little on the low side, I would think. I mean, they got 317 million assets, so just having 8 million in cash and equivalents, I would say that's kind of low. Total assets to include intangibles and property, plant, and equipment and all that stuff is 1.3 billion. So just 8 million in cash. That's okay, though. They are a profitable company. All right, let's go back to the sticks here. They're getting a positive reaction. Oh, Pookie joined the stream. Nikki's here too. Rudol's here. Ninja's here. Got a ton of people on the socials, though. Almost up to 200 people tuning in now. Welcome, everybody. It's nice to see y'all. Hatim or Hatim, hopefully I pronounced that right. I appreciate the shout out. Good to see you again, my friend. Looking forward to chatting with you soon too. I saw you're part of the group now, so let's make some money together. You know, let's get it. All right, OXM 5-minute chart. Again, close the regular session at $40.41. Sitting here, looks like it's catching a little bit of a bid. Let's give it the price a second to settle down, because sometimes we do get these quick reversals on these earnings, this earnings reaction. So give it a minute to settle, but so far it's looking good. It's up 15%. You would think this would have 180 reversed by now if this wasn't the real move. Let's see when they reported at 405. Looks like the reaction was a little late. Got the first green candle print at 406 Eastern. Okay, it's taking a little breather now. So that's what I'm talking about. I like to give it like 3 to 5 minutes, something like that. But so far, positive reaction. Let me see if I can get some data here. EPS, revenue, anything like that. Ninja says, on Discord says, any chance we can look at ADBE later? Absolutely. Yep, as soon as we get these reactions out the way, actually make a note of that right now. And I'll be sure to let you know what I feel about that as far as price action and any levels I can see, look at the option chain, all that fun stuff. So I'll definitely check that out for you, Ninja. All right, let me check my other screen here and see what the data is on OXM. Monthly chart kind of looked a little brutal for them. You can just pull up the monthly. You see it's this big downtrend dating back to like basically a year ago, late August, September of last year. This OXM's been stuck in a downtrend on the monthly chart for a year. Finally getting some positive movement from this earnings data. There we go. Here's the 5-minute chart. So it's still trading at $44. It's up about 9% right now. 11%. Okay. Let me check something else. I'm going to go to their investor relations page, get this data for everybody. Okay. And then we'll take a look at LSAK. But remember those levels on OXM I was talking about at the beginning of the stream. You can clearly see them on the daily chart. So It's trading just below 45 right now. It really needs to get above 47, 48. And then this thing probably has some pretty good upside here back into the mid to upper 50s maybe. This could be a sweet move if there's continuation, but it's trading at $45.50 right now. So that would put it just below where these resistance levels were. And this was from last month in August. Got rejected there. And it got rejected there in July. So back-to-back months of being rejected around 47, 48. Trading at 45.50 right now. So that's the level I'd have my eye on, for after hours. This post-market session we're in right now. It's right there below it. So 47 to 48 could be some sellers up there waiting. So just be mindful of that. Let me go back to their investor relations page. Second quarter results. Let's take a look. Oops. Let me fix that real quick. Sorry about that. There we go. I'll keep OXM stock price on the left over here. All right, let's take a look here. Okay. So this is the earnings. This is straight from Oxford's investor relations page. So this isn't some like third-party news article. This is straight from OXM. Okay, so they announced financial results for its second quarter fiscal 2025 that ended August 2nd. Consolidated net sales in the second quarter of fiscal 2025 were $403 million. Okay, compared to $420 million in the second quarter of 2024. So that is down a little bit. Doesn't seem to be phasing investors because it's obviously got a positive reaction. So let me just check something else here. Forecast revenue was $407 million. So 407. Let me go to trading view. $407 million. So they did miss the revenue forecast for EPS. Came in at 1.12. That's the GAAP basis, though. I like to read the other EPS. So EPS was $1.26 compared to $2.77 in the second quarter. I'm thinking they probably raised guidance or something because it doesn't look like they beat revenue or EPS. EPS came in at 1.26 and their forecast was 1.21. So they did beat EPS. And they missed revenue just by a little bit, kind of more in line, I would call it. They missed it by not much at all. They reported 403 million, and the forecast was 407. So slight miss on revenue, but looks like they did beat the EPS. So that's good for them. Let me see what else this report says. Tom, who's the chairman and CEO, commented, "Our teams executed well in a dynamic trade and tariff environment, delivering sales within our guidance range and an adjusted EPS above our guidance range," which we just talked about. They beat the EPS. For the second quarter, driven by better than expected gross margins. So it looks like they had better than expected gross margins, which is a good thing. It's a great thing. We have moved quickly to diversify our sourcing as well as to pull some inventory receipts forward and calibrate pricing with care to help partially offset the impact on product costs from the incremental tariffs and evolving trade environment that has emerged this year. The results of our efforts allowed us to continue to offer the product assortment our customer expects from our brands while maintaining our strong margin profile. Yeah, so I think has a lot to do with their positive reaction is the margins. Better than expected gross margins is a pretty big deal for a company like OXM. And again, we talked about what they're an apparel company. A lot of big names. Tommy Bahama, they own all that. Southern Tide, Duckhead, Jack Rogers, they're kind of lifestyle brands. Tommy Bahama is probably the bigger one. And they own they're in food and beverage. They have Tommy Bahama restaurants, food and beverage locations, Marlin bars, and full service restaurants. So they got their hands in a lot of different stuff, not only apparel, but the food and beverage business. And, an industry like that, the type of businesses that they're in, margin is very, very important. And, reporting better than expected margins, that's a big deal for them. Obviously, the stock price is reflecting that. It's up 12%, or a little over 12%. It's up almost $5 a share in the green in after hours right now. So their earnings look pretty solid as far as better than expected gross margins. Then the chairman and CEO also said, importantly, we are encouraged by positive comparable store sales performance third quarter to date. Total company comp sales are modestly positive in the low single-digit range, reflecting strong connections with our core customers and the development of new and compelling product. While tariffs and macro uncertainty remain near-term headwinds across our industry, we are focused on what we can control, which is delivering distinctive product, elevating the customer experience, and maintaining discipline across inventory and expenses. They obviously proved that with the better than expected gross margins. So that's spot on there. Our balance sheet strength, strong cash flow, and portfolio of powerful lifestyle brands position us to successfully navigate the current environment and create long-term shareholder value. So that's pretty good. So, I know the year-over-year numbers aren't good, but I think the big thing was the better than expected margins is probably, it's the thing that's pushing this thing right now. We look at a few other things. Food and beverage sales of $29 million were comparable to the prior year period. Gross margin was 61.4% on a GAAP basis compared to 63.1% in the second quarter of fiscal 2024. Yeah, so they did improve margins. On an adjusted basis, gross margin was 61.7%. Okay, we went over that already. The decreased gross margin was primarily due to approximately $9 million of increased costs of goods sold from additional tariffs. Okay, so they're going to blame the tariffs a little bit on that. And actually, their margin decreasing is not a good thing there. But it came in better than expected is what they're saying. Let's see here. Balance sheet and liquidity. Inventory increased $27 million or 19% on a last in, first out basis, and $29 million or 13% on a first in, first out basis. Okay. Let's see. Inventories increased in all operating segments with the exception of Johnny Was. I think I'm pronouncing that right. Due primarily to impacts associated with the U.S. Tariffs. Okay, let me see. During the first half of fiscal 2025, cash provided by operations was $80 million compared to $122 million in the first half of 2024. So that's a decrease in cash flow. I bet they blame the earnings again or the tariffs again on that. Borrowings outstanding increased to $81 million at the end of the first half of fiscal 2025. John on X, LSAK released. Okay. We're gonna go over them next. They are negative 9%. They're down 43 cents a share right now. Kind of trading on low volume. They only had 232,000 volume today. I mean, I guess that's a lot higher than their average 3-month in volume. It's only 24,000, but nonetheless, it's still kind of low volume. So the price action will be kind of spotty. Yeah, 1 minute chart, there's a bunch of gaps and little dots everywhere. It's just spotty price action when it trades on low volume. But looks like the data is out. So we'll check that here in a minute. I just wanted to see these other things because they're talking about dividend here. This is for OXM. The board of directors declared a quarterly cash dividend of 69 cents per share. We were talking about that earlier. This company pays, according to Webull, 6.8% dividend. That's, much higher than the cash dividend sweep that people are getting in their brokers' accounts on cash balance, and obviously higher than the treasury yields. So let me look at this again. So the dividend is payable on October 31st. Okay, so this is also has something to do with the positive reaction too. So they declared a quarterly cash dividend, 69 cents per share. It's payable on August 31st, as long as you're owner of record as of the close of business on October 17th. The company has paid dividends every quarter since it became publicly owned in 1960. So yeah, this is for you dividend hunters out there. Seems to be a pretty decent dividend stock. Outlook for fiscal 2025, the company is affirming its sales in EPS guidance. So no change in guidance. They're just reiterating it. The company expects net sales in a range of 1.4 billion to 1.5 billion, as compared to net sales of 1.5 billion in fiscal 2024. I'm just going to read a few more things here, and we'll move on to LSAK. Based on current tariff policies and historical sourcing patterns, the company estimates that, absent proactive mitigation efforts, it would incur incremental tariffs of approximately 80 million during 2025. The company estimates that it has been able to mitigate roughly half of the 2024 exposure through actions already effectuated, including accelerating product receipts and shifting its sourcing. All right, a little bit more about the guidance on the EPS. After taking into account additional vendor concessions and selected second half price increases, the company's current annual EPS and adjusted EPS guidance reflects a net tariff impact of approximately 25 million to 35 million. All right, let me see. Okay, the conference call. This is where people probably want to know where the conference call is. So they're going to hold a conference call with senior management to discuss the results, and that's at 4:30 p.m. Eastern today. So only in another 9 minutes, they got their conference call. Okay, and I'll get the link for that for everybody. I think it'd be interesting to see the conference call. I'm personally not going to stream it, but I will get the link for everyone, make it easier for everyone to get to it. Let me go back to their homepage, and we'll go right here. Okay, so right in the middle, presentations and events. Listen to webcast. They got a hyperlink right there. So starts in about 8 minutes. I'll put this on the bottom of my screen. Then we're going to move on to LSAK. So OXM, getting a nice positive reaction. And again, we already kind of figured out why. Better than expected gross margins. So investors are really liking that, and better than expected gross margins for an apparel brand name type company, and they're in food and beverage. Margins are important, and they had better than expected. So that's, I think that has a lot to do with why they're getting some buying action. And of course, they got a real sweet dividend payment. All right. So let me post that link. Okay, there's the link to their earnings web call. Starts in about 7 minutes. So let's go over to LSAK. Let's talk about LSAK for a second. Going into the earnings, their EPS was negative. This is considered a penny stock. Technically, anything trading under $5 is a penny stock. So keep that in mind. They do have a negative EPS. Free float 62 million. Let's look at the income statement just real quick. Okay, so on a quarterly basis, they have had negative net income for 5 quarters in a row. Definitely not good in my opinion. And on an annual basis, five years in a row, negative net income. So as of looking back the past 5 years, this is not a profitable company. There's a reason why they're trading under $5, but let's see if there's anything special about it. I mean, debt to asset is 68%. I suppose that's not bad. Cash flow. Okay, well, it looks like they do have some good operating cash flow as of 2024. Okay, man, maybe there's a little bright spot there. So they got positive operating cash flow. Okay. Cash and equivalents. Let me go back to the balance sheet. Total assets of 649 million. Liabilities 457 million. They got 71 million as of March 31st of this year. They reported 71 million in cash and equivalents, which it seems their cash position is increasing. So that's something good. I suppose it's not all too bad. I just, when I invest in a company, I would prefer that they have a positive net income at least, and unless it's like a newer company, and sometimes businesses don't profit in the first few years, and that's fine. But this company, we just looked at the past 5 years, and they just can't pull a profit. So again, this is a fintech company. Let me see if I can find out if they beat earnings or not. I'm thinking not, because they're down a little under 5% right now. They're down about 23 cents a share. I suppose it's not too bad, but LSAK, let's see. These aren't really big name companies. Let me go to their investor relations page and see if they posted the data there. So this thing, I know it's down 23 cents a share, but there's like nothing going on with it. It's not like volatile, like the price isn't moving. It's kind of stuck at 450 right now. And to be honest with you, according to Webull on the level 2 order book, the bid is at 450. The ask is at 475. So maybe it's just, it's trading on low volume. Yeah, the price is at 450 right now, but one single order fill at 475, and then the price will jump back up to where it closed at. Okay, I had a typo on my other screen. Hold on. Lesaka Technologies. Oops. All right, let me just close this down because we're done with that. All right, let's take a look at LSAK. Latest news. Okay, September 10th. Okay, so this is it right here. It's the news report for their earnings. Okay. All right, let's see. Lesaka announces preliminary fiscal year 2024 results, delivers on fiscal year 2025 profitability guidance, reaffirms 2026 profitability outlook, sets fiscal year 2026 profitability per share guidance, reflecting more than 100% year-on-year growth. Okay. We were looking at the income state, or it was the cash flow, and I just noticed that they've recently came back to positive operating cash flow. So that is a little silver lining there. Let's read some more. All growth rates are year on year between 2025 2024. Yep, got that. Okay, so net revenue of 328.7 million. All right, 300. What was there? Let me just look real quick. OXM, here's LSAK. Oops, there we go. Yeah, the revenue was expected to be 131 million was the forecast. So they beat revenue by now that's the yearly basis. So the 131 forecast was for the quarterly. Net loss of 87.5 million, which is better than 1 year ago. Okay. Commenting on the results, Lesaka chairman. Okay, so some commentary from the chairman. Fiscal year 2025 was a strong year for the group, delivering on our profitability guidance and advancing key strategic priorities. It doesn't look like they pulled a profit. I was reading that before. So I think they had a negative net income. They took a net loss, basically. So not profitable yet. And let me just see here. So from the CEO, we expect to maintain this momentum into next year and are guiding for growth of at least 35%. We have also introduced an adjusted earnings per share guidance Expecting this to more than double in next year. All right. There's really no movement on the stock though. It's back up to 4.70. So it's trading just below where it closed at. Let's see here. Fiscal year 2026 guidance excludes the impact of Bank Zero acquisition announced. Let's see where their web. Okay, this is the link for their earnings web call. I'll share this with everyone. It's already got the web call, and also the web call is not till tomorrow morning. So they're not even doing the web call tonight. I guess I'll put the link in the comments anyway. Y'all can, oh, that's because they're located in South Africa. All right. I gotcha. So their earnings web call is actually going to be 8 a.m. Eastern. Okay. Tomorrow morning, which would be 2 p.m. South Africa Standard Time. So that's why the earnings web call is not tonight, because they're not located in our time zone or in the U.S. At the least. So, but there's the link to their web call if anyone wants to see that. So it looks like we got our reactions, and again, we were talking about the $47 to $48 level on OXM on the daily chart. You can clearly see it. I mean, you can easily just throw a trend channel on this from there to there, and look at that. I mean, just have your charting software program do the work for you. You don't have to draw these lines out yourself. Just use a trend channel and boom. And so it's kind of slightly ascending trend channel, but the horizontal resistance, according to the volume profile, is right around 47. Let me zoom out a little bit. Right here at the top, it's right around $47. I like to give a little cushion, so we got some wicks on these candles, but I'm going to call the resistance. It's like a $1 range. $47 to $48 is R1, resistance 1 on OXM. It's trading just below 46 right now, so it's getting close. But it's interesting with the price action in after hours today. Look where it tapped. 47.40, right in the middle of that $1 range I was talking about. So that's why I kind of do ranges, because it's never going to be to the penny. Sometimes I like to put like a range, because if you're banking your trades on, oh, my resistance is exactly at 47, or it's like the resistance is exactly at 47.21 or something, because that's like where it wicked up to. You're gonna drive yourself nuts trying to play that level. I like to do like a little range, because sometimes it'll go just above it and then reject, or it's not always going to go to the penny on these levels, folks. So I'm gonna call the resistance on OXM 47 to $48. Clean break above that $1 range, if you will. We already looked at the potential upside on this, because back here when they had earnings, they reported on June 11th, which would have been their last earnings. They did have quite the sell-off, and there's some gap. There's a little gap there. Well, it looks like that gap got filled right here in July. That gap got filled. So let's see if there's any other gap-a-rooskies on this thing. I mean, I suppose there's a few others. This stock, I mean, pull up the weekly chart. This stock has been in the $100 range before. They've just fell off a cliff for the past, it's basically almost 1 year of price action is when they started trending down. So it's been trending down for a year. They're finally catching a positive move off of earnings. And it just so happens the after hours price action, which was the reaction to the earnings data, it literally came up to that resistance we were talking about, and it got rejected. So I do have a feeling there are probably some sellers sitting up there waiting in the 47, 48 area. Once that level of interest gets mitigated, and there's still positive momentum left, I could see this thing back in the mid 50s for sure. That's where it was at. That's where it was trading at before the last earnings sell-off, was in the mid 50s. So So it's obviously got a positive reaction. If it did have a negative reaction, I'd keep my risk right around 36, maybe a little bit below that, maybe. But it's got a positive reaction, so we don't really got to worry about the support we were talking about right now. And this thing is holding up quite nicely up here. I'm just going to put the fib, the bottom of the fib, basically where it closed the regular session at. And yeah, I'll draw it up to this top wick here, 47.40. So support level number one outside of the bigger time frames, I'd be looking at probably the mid 45s, like right around 45.50. That's probably what I would call it there. 45.50 would be S1, S2, 44.75. So pretty easy levels. Golden fibs at 43 bucks. So if it does start pulling back and sellers start hitting the tape, definitely would want this to hold 43 bucks for the bulls. That's the golden ratio. It's okay if it pulls back to there, because we see stocks after rallying pull back to the golden fib a lot and bounce. It's not 100%, doesn't happen all the time, but it happens more often than not from my experience. But it'd be ideal for continuation if this 25% holds up. And that would be right around the mid 45s. That's what I'm going to do. I'm going to call the support level number one for the remainder of after hours is 45.50. S2 is the golden fib at 43 bucks. Those are my two support levels, at least in smaller time frame candle price action, if you will. Time is a little after 4:30. Brutal Trade in Discord says someone made 2,000% on Oracle earnings. Wow. I mean, that stock had quite the move. I mean, the thing was up over $100 a share. Is it still up over 100 a share? It was earlier today. It was up. Let me just go to like the 2-hour chart here. Before the earnings, it was trading around 240. And then, yeah, that's what I saw it earlier today. It broke above 340. So it was up over $100 a share at one point. Still up about $80 a share. So what a move. And if you bought a call option on Oracle before the earnings, and you were even anywhere, if you were somewhat close to being at the money with your strike price, you got paid big time on that. Those deltas probably hit hard on those contracts. So you could have even bought one pretty far out of the money. You could have bought one, 50, 60 points out of the money, and that thing would have ended up in the money, and you would have got a pretty good payday on those as well. So well, I streamed this earnings reaction yesterday. Congrats to the Oracle bulls. Y'all kicked ass and got rewarded yesterday. Well, this morning, right? When you woke up today, because the earnings was last night. But anyways, yeah, just keep your eye on OXM. Again, 45.50, 25% retrades. If it can hold there, this thing's going to make a run at after hours high, which is right at 47.40, which it looks like it's trying to do now. These are 5-minute candles too. So you can see the bottom wick on this candle, this right there around the mid 45 range. There's obviously demand. And it very well could make a run to after hours high, which is 47.40, which is right basically in the middle where my resistance was I was looking at. If this thing gets continuation, this could be a very easy trade to the mid 50s, I think. Not financial advice, just my personal opinion. Of course, all of this is for educational and entertainment purposes, my friends. Let's do a little recap on some of my open trades and how those are going. I'll show a few of them. I shared some of these last night too, but everyone knows what happened. SPY kind of, SPY and Triple Q, they had a really decent post-market session this morning and last night. Just, a few pullbacks here and there, but nonetheless trended up very nice. Then, of course, the inflation data came in cooler than expected this morning. So you can see this Nice 5-minute green candle print here, exactly at 8:30 a.m. Eastern. That's when the inflation data was released, and everyone found out that it came in actually a lot cooler than expected. So I had a nice bullish move there. Then SPY just kind of was a little choppy, kind of traded sideways and a little bit of chop leading up to the opening bell. Then after the opening bell, there was a little indecision. It looked like it wanted to sell off a few times. Then it kind of rallied up to right around to where the pre-market high was, just below 655 on SPY. And then the selling commenced. And we actually took advantage of these. I didn't catch the first leg down when it started selling. But as soon as it made this lower high here, we ended up catching a piece of, this was right around, actually, we didn't even catch it till the third leg. I had a nice descending channel drawn out on my chart, just using these two, this high here from around 10:30 and this lower high around lunchtime. And then, of course, the low here around 11:30, and then this lower low around 12:45, and it just was a clear lower high, lower low descending channel situation type setup, and we ended up catching a big part of this move, the move going. And it was I started the live stream around 1 p.m. Eastern, and so we caught the nice move there, made some good money. And so those were live put trades I was doing live on a stream with the Discord members. We had a nice group of people in there. Everyone was making money and having a great time. And I like to do that. Now, the people that know me know I specialize in writing contracts. I'm typically on the selling side of the opening transaction. That's my bread and butter. But I do love getting on the live stream during the day when the market's open, and just doing some live trading. I do still day trade and scalp. I have a lot of fun doing it, using just a very small percentage of my portfolio to do it. The bulk of my capital is on the contract writing side, which is where I prefer it to be. And it looks like SPY kind of popped up a little bit into the close, but nonetheless, it was up 0.3%, 0.29% as far as SPY. Of course, SPY is the ETF that follows the S&P 500 index. The actual S&P index was up 0.3%. They're usually pretty close, but SPY up 0.29% today, even though it overall trended down during the regular session. The reason why it was still green on the day is because look at what happened in the post market this morning and last night. It, without, I have to say, without the nice pop on the inflation data being cooler than expected, there's no doubt SPY would be red today and QQQ would be red today. But with the nice and positive extended hour sessions from this morning and last night, that's why we're technically still green. So anyways, yeah, we traded some puts today and made some good money. Was very happy, and so were the members. Let me show everyone a few wheel strategy trades that I have open. I was sharing this with everyone last night too when I was streaming Oracle's earnings, but that's what I like to do at the end of these sessions, these earnings sessions. I'm gonna get rid of that bottom rocker there. It's kind of just show everyone some of the open trades I got. Let y'all know the types of trades that I've been doing, and kind of give everyone a peek under the hood, if you will, right? It's over 400 people tuning in right now. Good to see everybody. I see a lot of familiar names in the chats. It's always good hanging out with y'all with these streams. I do them every Tuesday, Wednesday, Thursday, 4 p.m. Eastern. And if you like the content, give me a follow on X. The handle is @swingingbull_1. You should see the banner on the bottom of my screen. That's my X handle. Give me a follow on there. I'm trying to build my presence. But I'm hoping everyone's also liking the content and appreciating the fact that I'm being transparent with, I'm actually showing people my accounts. I know there's Discords out there, they alerts, and they're not even trading them. They're just spitting out alerts, and We don't roll like that. I got skin in the game. I'm actually trading these things when I put something out there on the wire. I'm actually in it. All right. But yeah, I'm currently wheeling Mara. This is a $15 cash secured put, up 33% on that right now. I did collect $92.65 on the onset of the trade. So I'm trying to collect as much of that as possible before I close this out. I'd like to get at least 75% on that trade. That expires next Friday. So I only have 9 more calendar, well, minus today is basically over. So I only have 8 more calendar days before that one expires. JetBlue, I did sell some cash secured puts on them. I know JetBlue's trading just above my short strike right now, but I'm not worried about it. If I get assigned, I'll just start selling covered calls. It's no problem. But that trade is also green, just by a little bit, almost 7%. But that trade also expires next Friday. And I also started to wheel on Ford. I know I'm seeing a little drawdown right now. I'm down $11. You know, it's nothing. Dropping the bucket for me. Might be a lot for other people. So, you know, I'm not trying to say that, but down $11. I'm not sweating it. But I sold the $11.50 cash secured put. I did get $17 a contract when I opened them. They're trading for 23 now. The last time I wheeled Ford, I sold cash secured puts. I was able to get a few rounds of cash secured puts in, and then I eventually got assigned. And then I started selling covered calls. I did that a few times, and then my shares ended up getting called away for profit, and I collected their dividend. So I'm kind of just running that back, and I ended up with like a 10% return on the capital that I was using on the last Ford wheel. So that's, you know, I'm not trying to be greedy, just trying to get a solid 10% return on my capital. I'll wheel it for like 90 days. You got to think, if you can get 10% on your money in 3 months, I mean, that's 1 quarter, right? 4 quarters in a year. If you get 10% on your money each quarter, you're smashing the S&P annual average by like 4x, right? Should be looking at like a 40% return on your capital by the end of the year. And if that's the case, that you're doing fantastic. Okay. Some people that just want to double their account like overnight. You have to put it in perspective and be a little realistic about it. If you can beat the S&P annual average return, you're doing well. My personal preference, I like beating it by at least 3x. You know, if I get 30-40% return on my money every year, I'm a very, very happy camper. If I only get a 20% return on my money at the end of the year, I'm still very, very happy. You should still be happy about that. Rotten Melon Productions on YouTube. Good question. Do I trade pre-earnings on the buying side of options contracts or just sell premium? We do trades before earnings, and I stream live with the Discord members, so I don't really come on here to the social end of the streams with that stuff, but I do stream live with my Discord members. I am doing a $2,500 account challenge, Rotten Melon, and that I'm sharing on my X account. I put all the updates and the trades and the progress of the account challenge on there. So if anyone wants to follow the $2,500 account challenge, I started that 4 weeks ago, and I'm already up 9.1% on the entire portfolio. Just in 4 weeks. In 1 month, I'm up 9.1% on the whole account. If you want to follow that more closely, go to X and give me a follow, because I'm posting all the updates and everything there. But let me speak to the upper management of the Discord group, Rotten Melon Productions. Maybe see if I can squeeze in a stream, you know, for YouTube and X and all that before the regular session ends, because I think that would be fun to kind of live trade with everyone on the social part, not just exclusive to the Discord. So I'm making a mental note. I'll ask the higher ups of the company and see if that's something I can start doing moving forward, because that would be pretty fun. So anyways, yeah, just kind of giving you an idea of the kind of return on capital I'm looking for on some of these trades. I prefer to be more consistent, and that's the kind of results that I get when I write contracts. I'm just overall way more consistent and more profitable. You'd be surprised. I know my upside is capped on on my trades when I'm writing contracts, but there's a lot of creative things we can do in addition to selling premium. If we write a contract and collect credit, there's a way to kind of go around the upside being capped, and the way around it is you could take some of that credit and buy a naked option with it, like an out of the money naked option with it. So there's ways to circumvent the limits of writing contracts, and there's a lot of creative ways to add in additional legs to make sure you are able to participate in the upside, and it won't just be capped at your max gain, if that makes sense. So that's a lot of the things that I do in the Discord. Is I help come up with creative ways to make more money and to be very consistent and overall profitable. I mean, that's the goal. We're all here to make money, and I do treat this as a business, and I account for every dollar, as is everyone else should be doing that. Unless it's just fun money and you're here to have fun. I mean, might as well go to the casino or something. But I'm here to run a business, and I think I do a pretty good job at it. So. But yeah, it's almost 5 o'clock. Just wanted to share those 3 positions with everybody. And then also here, let me go to my X account real quick. I have been trying to build my social media presence. Everyone I know thinks I should do it. I haven't, I've always been like, I've been trading for a long time, almost 10 years. I've never really been into the social media deal because I just like making money in private and stuff like that. But I do love helping people. I do love educating people on different types of strategies and different ways to trade, because there's so many different ways to trade. And honestly, it's different for everyone. You need to find the strategy that fits your personality. And it can be different for everyone. Not everyone is great at day trading. Not everyone is great at trading options. It's just, you have to find out what your cup of tea is, and once you do realize that, things start getting a lot better. This was probably I'd say about 7 years ago, when I figured out I could be on the other side of the opening transaction. Like you don't just have to be a buyer all the time. Once I found out I could be the seller on the opening transaction, it was a wrap. It was all history from there. And it just fit my personality so well. And I love doing it. I actually have fun doing it. And a lot less emotion and a lot less stress. It doesn't require a lot of screen time. I mean, I basically manage my trades like once a week, maybe more than once a week if I'm taking like early profit, or I got to play some defense and put a hedge in or something like that. But typically, my expiration dates on all my contracts, pretty much, I mean, unless I'm trading SPY, are usually on Friday. So it's like, Friday's payday, right? And we're always looking forward to Friday's expiration, because that's when the contract writers, they love that. Contract expires worthless, and we keep 100% of the credit we collected on the onset of the trade. And, of course, if I make like 75% of my max gain in a short period of time, I'll probably take early profit, because why wait the rest of the time for the remaining small 25% left over? Because, of course, when we're writing contracts, the most we can make is 100% of the credit. But then again, I was just mentioning earlier, there are some creative ways to get around that by taking some of the credit and actually participating in a naked option in the same direction you intend the trade going. But of course, when we write contracts, especially, it's the credit, credit spreads, and when we're receiving credit, those don't have to necessarily be biased trades. They can be neutral. That's another positive part about being a contract writer is if I'm short the put, right, and I'm writing a put contract to sell to someone else who thinks it's bear, who thinks the stock's bearish, I don't need the stock to go up. It could trade sideways, and I will win that trade. And the person that bought it is going to lose it because of theta decay. So there's all kinds of interesting things that, I think a lot of people don't really realize about different ways that you can trade. There's so many different ways to skin the cat here and play this game. And that's kind of one of my roles in the Discord, is to help open people's eyes and let them be aware that there are more ways to trade that you probably aren't aware. We've been doing a lot of diagonal calendar trades. I'm going to start introducing ratio spreads soon. We do a lot of credit spreads. We do a lot of debit spreads. We do a lot of condors, which would be inverse, or just a traditional iron condor. Traditional iron condor, there's a credit spread on each side of the price. We're trying to trap the underlying stock in the middle, and that's how we make money on those. That's a traditional iron condor. Inverse iron condor, there's a debit spread on each side of the price. We pull those out when we're expecting a big move. For instance, the earnings catalyst is a good time to do an inverse iron condor. Some people call it a long iron condor because you're paying a debit when you open it. But I love those trades, especially for big catalyst events, because the stock can go to the moon, or it can burn and crash to the ground, and you would make money either direction. Don't get it twisted, though. The risk on those is if the stock stays flat. So if you're trading an inverse iron condor or a long iron condor, that's where the risk is. If the stock stays flat, you might want to consider stopping out of that the next day. But of course, with the earnings catalyst, more times than not, we do get a big move. So that's why those trades are ideal, which would be the inverse iron condor. So yeah, just letting everyone kind of know the types of trades that I do, and I have so much fun just helping people in the Discord, and I kind of got bored. I'm not gonna be honest. That's I have the time. I was already kind of trading and like this, and so me being in the Discord is just it's a way for me to help people. I'm typically not trying to sell anything to anyone. Most people that have known me for a few years in the Discord know that about me. Of course, the Discord company, PB Alerts, they have a business to run. And yes, if you want to dive deeper and really get one-on-one with myself and some of the other coaches, of course it's going to cost a little bit of money. But our coaching program's $39 a month. It's not much at all. I'll make that back for you on the very first trade, no problem. But that's also why I have we have a free section, so you don't even have to pay no money. If you check out the Discord for free and see how you like it and go from there, So I get a good joy when I help people and show people things they might not have known. And it's just the simple fact I've been doing this for quite a while, and if I can shorten someone's learning curve or put someone on to a new way of trading that ends up just being like this big aha moment for them, and it's just the perfect strategy for them that they didn't know, then I feel good and I sleep like a baby at night. You know what I mean? But yeah, with that said, this is the Swinging Bull with PB Alerts. I'm gonna show everyone my X account. Of course, it says I'm live right now because I'm streaming on X. But this is the account challenge that I've been doing. So again, I'm up 9.1% in only 4 weeks. I started the account with $2,500, and I've grown it to $2,726.79 in just 4 weeks. That equates to a 9.1%, a little bit less than, it's like 9.07% return. I just kind of rounded it up a little bit. And I know that's just a graphic and it doesn't mean much, but just scroll down on my X account. Look, I'm taking screenshots of my Fidelity account. These are the actual trades that I'm doing. All right, I've been writing contracts on Bull. I've wrote a few contracts on JetBlue. wrote a contract on Mara. We traded TSLL. That one was a lot of fun. And then we've been dipping our toes in the water on UMAC, which is a drone company. That's been a lot of fun trading as well. And I'm sharing the contracts I'm writing, what the credit I'm collecting on the onset of the trade, and what I'm closing them out for. These two on the bottom expired worthless, so I got 100% of that. Of course, it's a $2,500 account challenge, so I'm kind of limited on the amount of capital I'm using for this. It's a challenge. I put 25. I funded it with 2,500, and that's it. I'm not going to dump a bunch of money in there because I want to grow it faster. I want to prove to everyone, because a lot of people think you need a ton of money to write contracts. There's this misconception that if I'm going to turn into an option seller and write contracts, some people think you need like all this capital. I'm proving that you don't. If you got a few $1,000 and you're sick of the rat race of the day trading, because that shit gets old quick. Y'all know what I'm talking about. The emotional roller coaster with trying to day trade all the time. That's for the birds. That's not for me. And that goes back to what I was saying earlier. You got to find the strategy that fits you as a personality. I don't like to be stressed out. Okay. I don't like to be, overly emotional when it's not necessary. That's what happens when you're trying to day trade. I prefer to swing trade. All of my trades are swing trades. And I just click a few buttons, maybe once or twice a week, and I'm good to go. Of course, there's a little bit of due diligence that goes behind the setups that I'm trading, but yeah, if you're liking the content and you want to follow this challenge, maybe you just want to follow it, and I'll show you. I'm already 1 month into the challenge. Just wait 2-3 months from now. This account's going to be up a pretty good amount of money. But yeah, if you want to follow, this is my X account. My handle is @swingingbull_1. Again, I'm trying to build my social presence. So give me a follow. And also, if you want to join my coaching group to get these trades as I'm, when I alert them to the Discord and live, in real time, I'll tell everyone, this is what I'm entering. This is the contract expiration date. This is the amount of premium I'm targeting, and this and that. Definitely check out my coaching program. And I was authorized to offer 20% off. So all you got to do is go to my X account and click on this pinned message. I update this pinned message once a week, and it's the progress on the account challenge. Just go to that pinned message and comment income. That's a good one. That's what we did last night. Comment income on this pinned message, and I'll give you a 20% off code to my coaching program. But yeah, other than that, I hope everyone enjoyed the stream. It's been a little over an hour, so I'm probably going to go ahead and sign off for the day. We do have more earnings on deck for tomorrow. I'm actually looking forward to tomorrow's earnings, which is, I let me just go right here and show you here. Already plotted this out earlier, but for Thursday, yeah, that's what I thought. Adobe, we got Adobe's earnings tomorrow. I mean, obviously a multi-billion-dollar revenue company, so I'm looking forward to seeing Adobe's earnings reaction and seeing what their earnings data is, EPS, and more specifically revenue for a company like Adobe. And then we got Farm Brothers reporting, kind of some smaller names, but nonetheless, it's going to be all eyes on Adobe tomorrow. And I did promise someone, Ninja, that I would look at Adobe's chart. And I think did I go after my time? Okay, no, What the Duck on Discord has another stream going on. But let me just go over Adobe just real quick before I sign off, because I did promise Ninja I would take a look at the chart. So I'm going to just go one chart view. Let's look at what some of the levels could be on the bigger time frames on Adobe, depending if it gets a positive reaction, what level I would be looking at a sell order at. And then if it gets a negative reaction, where would be a good place of demand, if you will. So I'll go a weekly chart first. And Adobe's another one. It's been selling. It's basically been in an overall downtrend for the past. It looks like kind of. I'd call it about a year. It's been about a year. So it was in this downtrend here. This was towards the. This was like Q1 of 2024, kind of into Q2. So Q1 into Q2, it was downtrending, and then it popped out of the downtrend, pulled back a little bit, but it did make a higher low to signify that the downtrend was potentially over. And then all of a sudden, literally almost a year ago to the day, it went into this overall downtrend again. So Adobe needs to catch a break. I mean, nonetheless, it's still a $300 stock. I mean, this stock's been close to $700. You can see back here in 2021, it hit a high of 699.54. So just below $700 a share there at its peak. At its low, its recent low here, well, not more than recent. 2022, it was down in the upper 200s. And then so think about this. 2022 was trading in the 270s as the low. This thing rallied all the way back to the 600s. Look at that. It did take a year or two for that to happen, but nonetheless, what a return on that. So you got to think to yourself, Adobe seems to kind of be at the level of value, in my opinion. You can also see if you scroll down, kind of scroll out a little bit. Now this would be kind of 6 years of price action. You can kind of clearly see a lot of volume has come in, and if this thing ever dips below 300 again, that would definitely be an area of value for me. And if you're in it for the long game, I mean, you could probably go ahead and start taking some nibbles on it right now. Again, not financial advice. This is just kind of what I would do. And of course they have earnings tomorrow. So me personally, I like to trade the post reaction to earnings. Trading through earnings can be a bit risky. Now, if you have an Adobe position, let's say from a long time ago, maybe you just had it forever and your average is in the 200s or something, and you're trying to figure out, how do I protect myself from a possible negative reaction? If Adobe has a negative reaction, how do I protect myself? Well, what I would do is I would just put a collar on this thing. And if you don't know what a collar is, that means, and this is more ideal if you have a position you've held for years or a long time, or you've just held it, it doesn't even have to be years, just, maybe 6 months or a year or longer, and you're profitable on the position, and you don't want to sell it, you want to hold it, but you want to protect yourself in case there's a negative reaction. Then what you can do, and I would just do, because it's the purpose of the trade is the earnings catalyst. So you could even just do Friday's expiration. You don't even have to put a lot of time on these collars. Now, keep in mind, if there is a negative reaction, you might have to liquidate the position, but you will be fully protected. And my point is you could sell this $352.50 covered call. You can see right here, you could collect $1,600. Now that's also assuming you have 100 shares, right? But you might have 100 shares if this is a stock you've had for a few years. But I'm just trying to show you a way to protect your downside, and you can cap your downside through intrinsic value at 350. So you would take the premium you received from this $352.50 strike call, and then you would use that to purchase a 350 naked put. And it looks like it wouldn't cover the total cost, but you would get an extreme discount on that hedge, like a pretty solid discount. It looks like they're selling for the mid price. I guess I'll just take the last sale. So that naked put costs $1,700, but if you collect $1,635 in credit on that covered call, then that means that $350 strike hedge protection leg is only going to cost you $65, which means 65 divided by 1,700. That means you just got What's that? A 90, just about a 96% discount on that hedge. You saved a 96% on the cost of that hedge. That is amazing. And that also means if Adobe has a negative reaction, let's say it sells off to 325, because that hedge is in place through intrinsic value alone, your downside is capped at 350. But it would mean on Friday, you need to make a decision. You're going to cash in this naked put for profit. In essence, that would drop your cost. That would give you an additional cost basis reduction. Basically, you wouldn't really get a cost basis reduction because the premium on the covered call is being used to buy the put. What I'm saying is you wouldn't participate in any of the downside. So if it fell 25 points from 350 down to 325, the profit you would make on that naked 350 put would cover the loss that you would see on any shares, or the previous gain you had before would take a hit. That would be covered by the value on that naked put. You'd be fully protected. And then if you still wanted to keep your shares because you were still uncertain if there was further downside, then at that point, you could go ahead and add some time to the collar, maybe go out to the next monthly cycle, which would be October 17th, and you can do a collar for that day. Or because sometimes what happens is because of the negative reaction, maybe your opinion about the underlying changes, and you say, okay, well, instead of rolling my collar out and putting more time on it, maybe I'm just going to liquidate my entire position on Friday because my opinion about Adobe has changed in a negative way, and you saved yourself because you didn't participate in any of the downside, because the profit on that naked 350 put is going to compensate for any share depreciation from 350 down to wherever it sells off to by Friday. So in essence, you could take the profit on that naked put. Obviously, you'd be close to max gain on your covered call. So you would basically wash that out, and then you would you could liquidate your shares and just move on to another trade. And that's if your opinion of the underlying changed in a negative way. So just and these collar trades, you can do them on any, obviously any stock. I was just using Adobe as an example because someone wanted me to go over that chart. So as far as resistance on Adobe, if they get a positive reaction, I mean, no joke. I mean, this is a $350 stock. So you got to think a 10% move, that's a $35 move, right? Look at Oracle. Oracle was up a ton yesterday. So, if Adobe ends up being up 20% because of a positive reaction, and investors are just blown away and impressed, and it catches a bid, that's $70 a share to the upside. Where's that put the price? Look where this previous resistance is, right around 420. That's probably the level I would be looking at if there's a positive reaction. That'd probably be my second resistance level. I'd probably go to, let's see where some of these other, these are weekly candles, by the way. These aren't no 5-minute candles. These are weekly candles. So, we can put a little more weight on these levels. But I basically would call it 375 would be my R1, and then $420 a share. I think would be pretty good, strong level here on the bigger time frame. So that would be my resistance levels. If it gets a negative reaction, you can clearly see a potential double bottom on this weekly chart. So right around 330 a share, that's my support level number one on Adobe. If they get a negative reaction tomorrow, it's pretty clear on the chart. And if 330 doesn't hold, I'd probably go down to 315, which would be kind of the bottom of the blue bar of this volume profile. Puts it right around 315. But yeah, other than that, I usually don't play through the earnings unless it's just a lotto trade. We do lotto trades for fun, and of course I do the condors, the inverse iron condors sometimes on earnings, or if I do have a position I'm long on and it's just a position that's a buy and hold. Of course, I'm going to hold those through earnings. And then usually what I'll do on those is I'll just put a collar on it. And it's kind of usually I can make those cost free, where it doesn't cost me much, if anything, to put those collars on. And then I'm just fully protected, and I don't really care what happens. And then, or a creative way is you could take the credit from the covered call, because what if it has a positive reaction? Someone asked me that the other day. It's like, all right, putting the collar on is all fine and dandy, protects the downside. That is the main purpose of a collar. It's more for conservative investors that want to protect the downside because they're trying to preserve profit that's already on the table, or anything like that. But another creative way to do it, which will cost a little bit of a debit, is what you could do is when you could sell an at the money covered call to get the juicy premium to help pay for your hedge. What you could do is maybe just take 75% of that premium and use it to finance a part of the naked put. But then you can use the remainder of the credit to buy like an out of the money naked option. You can just kind of go out of the money a bit. If you're looking at the delta, I mean, you could probably do like a 20 or a 30 delta, somewhere in there for your out of the money. What I'm trying to say is you can take some of the premium, basically the premium you get on the covered call, maybe split it in half. Use half of it to help finance your hedge protection, and then use the other half to buy an out of the money 20 to 30 delta call option, which means if Adobe has a sweet positive reaction to earnings, now your upside's not capped and you can participate on the upside, right? So there's all kinds of creative things we can do with these trades, and I just love it. That's basically what I do. So anyways, it's 5:15 p.m. This stream went a little longer than usual, but that's okay. I have fun doing these. Again, my name's The Swinging Bull with PB Alerts. If you're looking for a new home, definitely check us out. If you do join the Discord group, tag me in the chat. I'll come by and say hello. We can talk for a little bit. Maybe there's something I can help you out with pretty quickly. And also, if you're liking the content, go to my X page. Again, the handle's @swingingbull_1. And if you want a 20% off code to my coaching program, just go to my pinned message at the top on my X account and comment income in the comments, and I'll send you the 20% off code. But other than that, hope everyone enjoyed the stream. I hope everyone has a great night. And until next time, I'll see everyone in the next video. Cheers.